Hello everyone, welcome back to my channel. This week I've read the Memo by Howard Marks, coming into focus. Howard Marks has been very infamous in the investment side, probably because even Warren Buffett praised him. As Warren Buffett says, every time Howard Marks has published a memo, he must first click to read it. He's a co-founder of Oak Tree Capital Management, which is asset management, has managing more than $100 billion assets and has a diversified portfolio while also focusing on the bond market. So today I'm gonna to talk about some takeaways I have got from Howard Marks' latest memo and hope you guys would find it helpful. So now let's get started. In this latest memo, Howard Marks has analyzed the current investing environment and the cost of the current situation, as well as his suggestion to the investors. So the first part, talk about the cost of recent market. Current stock market situation is not a market cycle, while there will be bulls comes after bears and it comes to the bulls market because of the economic cycle. But he said in this scenario, it can be different. He expects that the recession is not the cause but the result. And in his opinion, V-shaped recovery would be impossible. It's because of the city lockdown, a lot of people cannot go to work, and because consumers' consumption power has decreased, a lot of small business has go bankrupt. So that comes to needs of further assistance, which is stimulus plan from the Fed. And in order to help the situation to be improved, people need the help from Fed, no matter every people's life or some small business or some industries that has been impacted heavily due to COVID-19, like airline business and travel business and also hotel business. And he mentioned that trillions of dollars is not stimulus but a support in order to make this normal economic activities can go on smoothly. And although the Fed has already printed tons of money into the market, but they still have bullets. So even though the interest rate already comes to zero, they can also have other actions, like if in the future they bought corporate bonds or they even bought some securities. And on the second part, Howard Marks has explained why the current stock market has been so high. It's because the current Fed fund rate is almost close to zero, and because the stock price is the current discounted value of future cash flow. When the interest rate is decreasing, the discounted present value will increasing. So that's explain the current high stock price. And because of interest rate is zero, and there's the fear of missing out in the marketplace, so a lot of investors, they may invest in the real estate market or they invest in stock market. That makes those assets price keep increasing. At the same time, when price high, the risk also comes along. And I really appreciate that Howard Marks used a diagram to illustrate a situation, how the different interest rate can change the potential return of the assets. Like in the past, when people invest the same amount, they would be expected a lower return, actually, because of the close to zero interest rate. And I find this is something that can usually be ignored by the investors because they think the price high, and that means the return would also be high. But if we look in the long term and we look at the situation that before the interest rate comes to zero, the returns actually be lower. In the third section, Howard Marks talks about the changes in the composition of stock market, where the currently S&P 500 has been driven by the 5 biggest tech companies, FAAMG, which stands for Facebook, Apple, Amazon, Microsoft, and Google. He thinks that those big tech giants has benefit from this pandemic and they have going up like non-stop. It actually has done some negative impact to some of the tab. For example, like Facebook has bring threads to the traditional publishers like magazines and medias, and Amazon has bring threads to the traditional brick-and-mortar stores like some physical stores. And Howard Marks also compare the current FAANG stocks to the Nifty 50 in the 2000 tech bubble. He thinks there are some similarities of those stocks, especially when you saw that those tech stock is no longer measured by its PE ratio, or it's measured by its earnings per share, but it's really measured by the future potential to grow. And in his opinion, that kind of similar to the 2000 situation, but at the current circumstance, those tech companies are bigger and have more moat comparing with Nifty 50, but he thinks there's definitely some bubbles exist somewhere. And the last part is some of his recommendations to the investors. One thing I find is very interesting is that some investors may have all in cash and they are waiting for another market correction. In Howard's opinion, it's not the best choices, although there's no risk of losing money, but the return of the cash is zero. They also miss the opportunity of market growth, and in the environment of the inflation around 2%, if those investors, they are holding all cash, their assets are definitely devaluated. He do have some advice to the investors. The first is that the investor would expect lower return when comparing with previous environment, and just prepared mentally if that is the case for the next several years. And the second advice is that the investor can put their asset in some risky assets if the investors are seeking for a higher return, but they would need to keep in mind that the risk level also increased. Maybe that has been higher than their previous comfortable zone. So that is one thing they need to sacrifice in order to expect the higher returns. And the third advice is that the investor can invest in some smaller stocks or bonds that is in some niche markets that a lot of institutional investors may not necessarily invest in. If those companies perform well, they could expect a huge amount of returns. But of course, those aggressive investment style also comes with a higher risk. So that's all the takeaways I have after reading Howard Marks' memo. I will also leave the link in the description box below. And you guys can also have a read if you are interested, and you can also listen because it's also have an audio version that I think is great. So yeah, that's all for today. Thank you guys for watching, and I will see you guys in my next one. Bye.